Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
But who loses in that environment?
Risk assets lose, in that environment. Investments predicated on continued global growth, and those are risk assets at the moment. Major multinational players, lose. So stocks would could potentially get hit in that environment if the U.S. dollar appreciates in that environment. One of the reasons although it's not a deflation, it's a disinflationary trend still that we're in, but a pure deflation just changes the numbers, in a big way, and it's another reason why it's the Japanese yen. If you look at it, they got into a real deflationary environment, and so that would be a good lesson to take from. The real estate got crushed. Their stock market was crushed, obviously, and has never come close. I think it was at 38,000, and 1989. So what are we, 20? 30, and it's not, what's it, 9,000 now. So risk assets get destroyed in a big way because the consumer just changes his habits completely. Money comes home and hides and doesn't go back offshore, and that's where the U.S. dollar tends to get the benefit there. A lot of dollar-based credit would just come home from all our institutions with money around the world in a real deflationary environment. And this is why Bernanke is doing what he's doing. It seems to be the only policy tool left to him to stave off deflation. That's why it's called a reflation. And if it doesn't work and demand doesn't rebound, it's big trouble.
One last question from TJ, Jack. The recent auction of TIPS carries a negative yield, and that they made a big deal about this in the press, that it's a sign of inflationary expectations. Do you agree, or is it just, the financial markets are just operating in very strange ways these days?
Yeah, John Ross talked about that in Currency Currents today in the issue. We don't dismiss out of hand the inflationary story. And the potential. Whenever you have this much money, sitting out there, that could turn if what's called monetary velocity changes, the way people look at money and use money. If that were to change and go and start to go positive, but we don't think that's going to happen for a lot of different reasons. So we have not bought the inflation argument, and we continue not to buy it. We don't think at least the government bonds are in a bubble. We think the junk bonds are in a major bubble, corporate junk bonds, but we don't think the government bonds represent a bubble. We think it represents real demand and real fundamental reasons for this to happen. So we just don't buy inflation at all, given the trends in the global economy.
Jack, one last, comment. Can you please repeat the name of that research report again?
Sure. It's Hoisington, spelled Housington, Hoisington Investment Management. And if you go to the site, you'll see economic research, and just click on that in their latest issue. Just a wonderful piece there about bonds and deflation. And I think he makes the point and has made the point in the past about this velocity, monetary velocity. If it's something you haven't heard of before, he covers it very, very well in an understandable fashion and lays out why he doesn't think it's going to change. And in fact, what we're really seeing in terms of monetary velocity is mean reversion back to where it's been historically. And the reason it was, got so high was because of, all of us using our houses as ATM machines and all. That was a distortion, and we're getting back to where we were. And monetary velocity, although it sounds esoteric, it's a huge point, and it goes to it's another, major underlying reason why the stimulus that the government is doing isn't working. The move of velocity back to its historical norms is in and of itself a reflection of a secular change in the attitudes of consumers towards debt. And he covers it very well in that piece.
Well, we'll have to read that. I'm going to go and do that right after this webinar, Jack. I want to give you just a moment to give us any closing comments. But before that, I want to remind all the attendees to sign up for the free trial link. You can go to www.blackswantrading.com/ccpro under our trial.html, or you can just easily go to the website and click on that. So that's just the link. Either way, you can do that and get a 2-week free trial. Jack, do you have any closing comments?
Yeah, I would just say, obviously what everybody is watching is the Fed, and if they are very emboldened and very confident that $1 trillion, another $2 trillion, whatever of QE2 is going to be the thing that turns us around. That just means more dollar devaluation. So the dollar gets hit very, very hard. But if we see some type of, as I said, watch for some type of implicit announcements between the Treasury and China, those types of things in the background, and some appreciation of the Chinese currency, then we, and of course the jobs report this month's going to be a very important indicator, I think, and have some bearing on how the Fed makes its final decision on QE2. But as you watch that in the background, if that's the case, there's no reason the dollar can't rebound here, and rally. So just don't get stuck into this idea that the dollar has to go straight down. It's gone straight down for a lot of good reasons and may continue, but just be careful here. That's what I would just add.
Jack, fascinating as always. You always bring in many different trading scenarios. So not only what you're thinking, I should say the most primary thought, but other plausible scenarios. It helps all of us as traders to think about what might happen in the markets. Again, thank you so much.
Thanks again, Steve. And thank you, everybody, for staying on. I appreciate it and all the great questions.
I was Jack Crooks. He is the president of Black Swan Capital, and I would urge you to go to their site, www.blackswantrading.com, and sign up for the free trial link. You can get 2 weeks free of the Current Professional. Please, if you're interested, go and check it out. Just want to remind everyone that we have webinars at the ISC coming up. Nicole Walks will be talking about condors and butterflies on November 2nd, and she'll be back in December to talk about the same topic. So it's sort of part 1, part 2. And November 9th, Tony Hansen. November 16th, Jason Ayers. And November 23rd, Mike Tusaw. So that's what we have coming up for November. I want to thank all of you, the attendees. You make this program great by all the great questions that you bring forth to Jack and all the other guests. And if you'd like to listen to this again, you know where you can get it, www.isc.com/archives. You can go to fxoptions.com and click on the archives there also. Lots of ways to hear the replay, if you will. On behalf of the International Securities Exchange, this is Steve Meisinger wishing you a safe and happy trading day tomorrow. And again, looking forward to you coming back on November 2nd. And please, listen to this again. Jack gave us some really great thoughts about the markets, and you're probably going to want to listen to it again. Thank you, and have a great evening. On behalf of the IC, Steve Meisinger saying good night all.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.